Hey, what's up, guys? John here. The Federal Reserve just increased interest rates 75 basis points, and now 2 more hikes are coming. A total of 125 more basis points will be coming to this market by the end of the year. We're seeing the 2-year Treasury at a whopping 4.1%, which begs the big question. Why would people invest in real estate, in multifamily real estate, in single-family homes, in commercial properties, if they're going to do so at a 4.5% or a 5% return? They have higher insurance costs, higher property taxes, higher repair costs, more vacancies, and rents are starting to come down. Seems like a lot of risk. I think we're going to see a lot of investors across the board pulling money out and parking money in treasuries. I think we're going to start to really see the consumer in America go through a different space in their head, saying, you know what, should I really make this purchase? Do I need to have it? Should I make this investment? Should I just hold on to cash? Should I park money in treasuries? Everything is going to be changing. The AMC meme stock crypto type of excitement, just taking these to the moon type bets, I think are going to be changing. We're already kind of seeing it in a small way, but I think it's going to really start to change over the next 6 months to the next year. We're going to start to see unemployment rates really going up, well past the 3.6% that we're in right now. They're saying that we're going to go into the mid 4s. I think we're going to see the unemployment rate going to the 7s to 8s to what we were seeing in 2008, 2009, 2010. And why I think this, if we're looking at as a whole, credit card debt, whopping 1.2 trillion, auto loans, 1.6 trillion, student loans, almost 1.7 trillion, all of this debt that's been sitting on the sidelines is just going to get much more expensive to service as they continue increasing interest rates. And as that's happening, we're going to start to see more job layoffs. People are going to start really assessing how much money they're spending. And they're going to be shopping all of their labor in their companies, saying, you know what, I know I paid 15 to 20% more for that employee last year, but can I save money now? Job market's changed, labor market's changed, and they're going to start renegotiating. We're going to see all this happen, trust me. I'm going to walk you through exactly what's going on. Please hit the like button. When you hit the like button, YouTube's going to share this content to educate more people about what's really going on in the economy. The Fed just raised interest rates by another 75 basis points, putting mainstream economy dangerously close to the edge of a lending cliff. The Federal Reserve's decision to raise interest rates 75 basis points for a third consecutive time at the Federal Open Market Committee meeting is a step being taken to cool the economy and bring down inflation, but it's also putting small business owners across the country in a lending fix they have not experienced in 32 years. If the Federal Reserve, FOMC's next, matches the market expectations for 2 more interest rate hikes by the end of the year, small business loans could reach at least 9%, maybe higher, and that will bring business owners to a very difficult set of decisions. Businesses are healthy today, especially those in the rebounding services sector, and credit performance remains good throughout the small business community, according to lenders, with the Fed's more aggressive term against inflation will lead more business owners to think twice about taking out new debt for expansion. We're going to see a lot of these business owners they're not going to be able to make it. The reason being is that they're addicted to the really inexpensive debt. They can borrow money very cheaply. They can invest in their businesses. Now all that's changing. The cost for labor was going up with entry-level jobs. The cost of the products that they were selling is going up. Now the consumer's going to have less money. It's going to cost more to service that customer. It's going to cost more to keep the lights on. And what I think is going to happen is we're going to start to see all of these small business owners going out of business, and we're going to see investors start to reassess how they can use strip malls and shopping centers, and how they can, they're going to probably start doing a lot more conversions into storage units and into housing. We're going to start to see a lot of the economy that we know today change over the next couple of years. There's no doubt about it. One industry to change will be property insurance. Honeycomb Insurance, for example, is transforming insurance across condo associations and landlord policies. What I believe is going to happen right now is landlords are going through shock as they look at more and more increases across their policies, and they're going to be asking themselves, how can they save money? Well, you can save money by going to honeycombinsurance.com, save upwards of 40% on your current policy. They're rated AM, which is the highest rating you can have as an insurance company. So they have incredible coverage, great customer service, and they're using technology and data to drive down cost of insurance and pushing all those savings onto the consumer. That's what a smart and savvy investor is doing right now. They're looking at how they can save money. They're saving as much money as possible. They're paying attention to the economy, and they're getting ready to deploy that capital onto distressed assets. So 9% for small business owners, it's pretty unbelievable. What I think is ultimately going to happen coming very, very soon is we are going to start to see traditional banks and credit unions tighten lending standards, and businesses begin to breach debt covenants based on debt service coverage ratios, the amount of cash flow needed to cover debt. More business owners will turn to the SBA loan market, in which firms like Hearn specialize. I also think it's very smart for people right now to have multiple different bank accounts at different lending institutions, maybe some credit unions, maybe some traditional banks, maybe some, relationships with companies like American Express. The more opportunities that you're opening yourselves up to get access to money, the better. The higher your credit score, the better. The more you're saving, I'm telling you, it's going to be much better. I think we're going to be stepping into, people thought I was crazy last year in Q3, Q4 when I said, why are the smartest people in the room selling? Look at Bezos, look at Zuckerberg, look at all the big tech giants. Why were they all liquidating tons and tons and tons of stock at the height of the market? And everyone else is buying. The masses are buying, and the smartest people and wealthiest people in the room are selling. Obviously, they think that the height of the market is in, and they want to cash out. And the reason that they're not just simply taking out a loan against their stock portfolio is because if the stock portfolio pulls down, they can get margin called, and they're not going to do it. And so that's why they ended up selling a bunch of stock. That was my belief. That's what I said last year at the end of Q3 on a YouTube video, saying this is what's happening. And then ultimately, stock market started falling a few months later. Real estate, I've been saying that we're going to start to see rents fall. We're going to start to see the entire climate in the real estate space change. And with it is going to pull so much demand out of this market. And it's happening right now. I was just ahead of the curve on it. We are going to start to see a once-in-a-lifetime opportunity for smart and savvy investors to take advantage of great opportunities, great investing opportunities. They simply just have to pay attention. They're telling us right now that the easy money is gone, and that the entire economy is addicted to easy money, and they're taking that easy money out of the economy. What's going to happen? It's going to be the debt that easy money is going to get so heavy, and that debt is going to get too difficult for the average person to hold on to. They're saying the Fed is expected to keep rates higher for longer. The change since summer, reflected in the stock market as well, is the acknowledgement that the Fed is not likely to quickly reverse its interest rate hikes as inflation proves stickier than previously forecast, and the key metrics of the economy, like the labor market, don't cool fast enough. As recently as last FOMC's meeting in July, many economists, traders, and business owners expected the Fed to be cutting rates as soon as early 2023. Now, according to CNBC, surveying the economists and investment managers, said the Fed is likely to reach peak rates above 4% and hold rates there throughout 2023. This outlook implies at least 2 more rate hikes in November and December for a total of at least 75 basis points more, and including Wednesday's hike, 150 basis points in all for September through the end of the year. And that's a big change for business owners. You have 75 million business owners in this country, right? You're looking at the numbers. What we're going to see here, we're going to start to see a devastating restructuring of capital. And if you are smart and you are savvy, you are going to be able to multiply money. You'll be able to multiply money over the next year or two. It's just going to really come down to just being patient, having a really good plan, a really good strategy, watching every dollar that you're spending. Only spend money on things that are going to make you healthier, stronger, and smarter. If they're not doing those things, then you have to really question the investment. I always look at all my hard costs. If I can save money anywhere, for example, I just left my cell phone provider and I went somewhere else because I could save money. People should be doing that. They should be looking at all of their expenses and ask themselves how they can save money. I think one of the easiest ways to save money, if you're a landlord or a condo association, they're transforming condo associations, Honeycomb Insurance. If you are a landlord, shop a policy. It takes 5 minutes to see if you can save money. It's the easiest and smartest investment of time that you can make. Just going over to honeycombinsurance.com. Subscribe here and subscribe to my second channel and LinkedIn, Twitter, Instagram, and TikTok up in the banner. What do you think about this entire situation? Do you think that we're going to start to see a lot of home sellers really wish that they would have reduced their prices a couple months ago? Or do you think we're going to start to see, this market, go back to a level of normalcy? I think we're going to be watching a period of real panic coming very, very soon in the housing market. And with that panic is going to come opportunity. I'll see you guys in the next video.